Mr. Seetharaman is the CFO, now joining in to talk a little bit more about the growth projections. Good to have you and welcome to ET Now. Now, you have said that your revenues will grow at a CAGR of 15 to 20% over the next 3 to 5 years. So how do you plan to achieve this growth rate given that revenues have largely been flat or muted for the last 3 years?
Yeah, good morning to you and good morning to all your viewers. Thank you for having us on your show. The sales, the way the sales has grown, or in your words, not grown as much, has been part of our strategy. Two main reasons, if you see how the sales has performed. One is we have defocused ourselves from the European market. We have divested 3 European subsidiaries over the last couple of years. So it's not really a like-to-like comparison if you look at a 3-4 year kind of scale. And number two, we have moved more into EP projects. So in EP projects, you don't have a construction portion that comes through, but construction has always been a pass-through and a margin depleter for us. So these two have kind of contributed to how the sales numbers have been. But what we have to essentially look at is what is growth for WABAG. Growth for WABAG has always been profitable growth. So if my PAT is growing better than my sales, that's what we focus on. And in the last 4 years, if you see, our PAT has grown at a CAGR of 45%. EBITDA has grown at a CAGR of 25%. We are in the 13 to 15 EBITDA range, which we expect to maintain over the next 3 to 5 years. Plus, you've already seen us pick up new orders. Our order book is swiftly progressing ahead. We started with a 11,000 crore order book at the start of the year. Now we are sitting on a 14,500 crore plus order book. And the pipeline is very robust and strong. And we are very confident about the growth prospects for the sector and also for the company.
Okay, fair enough. And what is the outlook then when it comes to what you will do to achieve your overall growth rate, given that revenues have been flat or muted in the last 3 years? So what is the strategy in place?
See, last 3-4 years, as I said, the sales is not a real like-to-like. We have also recast our business based on the strategy. So the sales is a reflection or a consequence of that. But now, we said at the start of the year, we are already in kind of a base from where we will grow. And growth is not an option for us. It is a necessity with the kind of order book we have. That's how we guided a 15 to 20% order growth. And how are we going to achieve it? It's going to come out of the emerging markets, India, Middle East, Africa. You're already seeing order intakes in the Middle East, which are coming up, order intakes in India, which are in the pipeline, which we will announce. Furthermore, order intakes in the Middle East that we are looking at over the next couple of months to look at. At the start of the year, we gave about a 16,000 crore closing order book position for the current year. During the first quarter, we spoke about us being preferred bidder in orders of about 6,000 crores. We've already booked 75% of that. Today, we are preferentially placed in orders worth about 3,500 crores. That takes the annual order intake kind of outlook to 8,000 crores. And we are well on track to be on this order book. Number two, in terms of concentrating on the products, desalination will be a key focus for us. Recycle reuse will be a key focus for us. Wastewater treatment is going to be a key focus for us. And of course, growing our O&M base. We are in a 15 to 16% range of revenue. This we want to take it to 20%. Plus be an EP bias company, having more business in the international spread and also industrial projects. All of these will grow our business, both from a sales and more importantly, from a EBITDA, PAT, and most importantly, the cash perspective.
So since you have given somewhat of an outline on what the order book flow is like, I wanted to understand where is it that you now expect major orders to come in from? And if there are any large projects on the horizon that you may have bid for?
Yes, you've already seen even in the first half, we have announced at least 2 or 3 large orders. We have bid for more large orders, mainly in the Middle East and the African region. Of course, India, we have a few more orders that would come through, a couple of them which are large. So India, Middle East and Africa will be the core market for this year in terms of the order book for the next half year, I would say.
But would India continue to be at 46% of your revenues, or do you see the geographical mix in terms of percentage breakup actually changing anytime soon?
See, we in our strategy, we said we want to be at least about 50% of our business to come out of international geographies. And of course, it will depend over years how this mix will move. But if you look at it over a 3 to 5 year kind of basis, we would broadly be 50-50 between our India and international markets. In some years, we may even be a little more than 50% in the international markets because of the large orders in the Saudi Arabian region that we are getting, in the African continent that we are getting. So few years, we may even be better in the international front, but broadly, we will be 50-50 between India and overseas. And we don't see this changing either from a strategy perspective or from a delivery perspective.
And what is the outlook when it comes to margins? What is going to lead to the expansion from the current levels of 13% to 15%?
See, last few years, it has been more efficiency driven, but the next 3 to 5 years will be both volume driven and efficiency driven. As I said, the order book has swelled and will continue to grow. And delivery of this order book will bring volumes. Volumes obviously mean that we will have better EBITDAs than what we have today. We will continue to work on the efficiencies in terms of the mix, mainly more EP projects, more industrial projects, and more international projects. Plus, a key factor of the EBITDA kicking up will be the O&M business. Today, we are about, I would say, more in a 15 to 17% range on a very broad basis. There are quarters where it could be a little higher, but broadly, we are in the 15 to 17% range. We'd like to gradually take it to 20% over the medium term. And, O&M is a very annuity business, very cash accretive business, very margin accretive business versus EPC. And we will focus on these main factors of EP, industrial, international, O&M, and of course, volumes. All of this will drive the margins up, and it's already reflecting. You are seeing us being in this 13 to 14% range consistently. And over years, you will see that this will also expand.
But Mr. Skandaprasad, a majority of your order intake and order book is in the municipal segment. Tell me, what opportunities and challenges do you foresee in this particular space, and how is it that you plan to now lean and veer towards more and more the industrial segment as opposed to municipal?
Aisha, see, water is a social subject. We can't take the municipal element out of it. So I'm not going to tell you that we will become an industrial company. We will remain a majority municipal company. But when we say municipal, what are the risks that we see in municipal? The biggest risk is usually payment delays. And this we have already countered to our strategy by looking at projects which are multilateral funded, bilaterally funded, sovereign funded, backed by LC. So payment security is our first filter. Even if we go for municipal projects, it's typically not a case where I rely on the budgets of the municipality or the state. I rely on large multilateral banks and sovereign funds to pay me. So the risk of payment security is taken out. Number two, we don't contract with states. We don't contract with municipalities. Complete no-no. Today, more than, I would say, 97-98% of our order book falls in this payment security category. So even if it is municipal, it is a secured municipal. Number three, I will not also take away the fact that we are not moving towards industrial. You see already in the first half, out of the order intake, we had a very large order intake. We embarked into the solar PV sector with Indosol Solar. This is a large desalination plant a EP project followed by a long-term O&M, cumulatively 1,000 crores. We had a repeat order from Reliance. So industrial will also grow. And when it comes to how do we manage the execution, for us, whether it's industrial or municipal, what we concentrate is on WABAG standard of delivering. We have highest standards in terms of quality, safety, and the customer is not going to drive us in terms of how we deliver the project. We take a lot of pride in the way we deliver, irrespective of the customer, on time, on cost, and on quality.
And good luck with that. Clearly reflective as well in your stock price too, but great having you on the show. Thank you for your time.